All right, we are live. Welcome everyone that's received this video. I know you all are excited to talk about something that I'm pretty excited to talk about. It says insurance financial planning. And what we're going to discuss in these next couple of moments, not necessarily just how to make money or keep money, but how you can be in a situation where you can pass along this money to your family members, which is very, very important if you have loved ones that you want to care for. Okay. Now, when you think about insurance, you want to think about the transfer of risk. Okay, there's a transfer of risk when it comes down to insurance, and you could pretty much insure everything, right? It's not too many things that you can't insure, including your own money. So the basics that we pretty much know what to insure is our life, our health, our home, our mortgage, our car, our business, our renters, right? And this is going to put us in a situation to where if anything was to happen, we're able to financially be covered in a situation where we could recover whatever we pretty much lost. Now, we're going to go dive into how to utilize life insurance for its best of its abilities, but not necessarily just for death insurance. When people think about life insurance, they don't understand that there's different components to life insurance that you could utilize to its fullest potential. And the first way that people pretty much think about is final expense insurance, where you could pretty much cover the funeral costs. That's going to range between 9 to 20,000, or you could cover the cremation expense that whether you want to be cremated or have a funeral, that's about 4 to 7,000. But sometimes you have leftover debt, whether you haven't paid off your home, you haven't paid off your credit cards, to where you want to make sure that anything was to happen, that could cover the rest of your debt instead of leaving it to your family. Or you have some people that say, you know what, I have no debt. I want to be able to just get a lump sum of money once I pass on, to be able to pass on an inheritance to my family, right? And what does this necessarily, in entail? We're talking about the age, your health, your amount of coverage. That's going to determine how much you pretty much need to pay a month, a year, half a year on your insurance to be able to make sure that this amount of money is guaranteed to be passed on to your family, which is pretty simple, pretty self-explanatory. Now, the other uses of insurance that a lot of people don't understand is how to utilize insurance as an investment need. Most people call it the infinite banking concept. Now, utilizing an index universal life insurance policy, short for IUL, we say that you can actually utilize your insurance policy not just as a death insurance, but a life insurance as well, to where you can have a savings account build up a sort of cash value to where not necessarily you don't feel like you're necessarily paying for the death insurance, but you're actually paying as you're still living, because 40 to 80% of your premiums is actually going to be invested. And the perks of it is that it's going to invest against the S&P 500. Now, if you know anything about the stock market or the S&P 500, you pretty much understand that the S&P 500 has been in a uptrend for the last 20 years. So that means that you're going to get gains on whatever amount is in that cash value account. Now, those gains could cap between 4 to 6%. And with some companies, you can get max gains about 20%. We're talking about yearly. And the reason why people necessarily love this kind of investment is because there's zero chances of you losing your money. And the reason being is because they're not actually exposing your money to the markets. Your money is just gaining its value based on the markets and its value to go up. On top of that, you get some living benefits, okay? So let's say if anything was to happen, if you needed to receive some money or take some money out, you could utilize that as a savings account and be able to receive that money tax-free in a lump sum payment. Whether it's 100,000, a million, 2 million, you can be able to receive that money with a tax-free benefit. Now you also have the ability for early withdrawal, just in case if anything traumatic was to happen to you over the next few years that you're living, whether it's a stroke, whether it is a health problem, or anything of such, you could be able to receive that money. And now you're able to go ahead and pay off all of your hospital bills. And this is still while you are living, you can be able to receive these benefits with your life insurance. Now, one of the best parts is that you now have the ability to pay it on up, meaning that you have a flexible premium payment. So if you say, you know what, I'm going to slow down on my payments for a certain amount of time, with this kind of policy, you have that ability to do that. And you also have a permanent level life insurance benefit. Now, what does that necessarily mean? It means that typically with life insurance, it involves your age and your health. Now, as you begin to age, your health will begin to change as well. Now, as your age gains, that means that you're going to be able to pay more in insurance the longer that you wait to go ahead and pay. You go ahead and get covered. So versus a 20-year-old and a 40-year-old, that's a 20-year difference. Now imagine you get this insurance at 20 years old. With this kind of policy, you're going to be paying the same amount whether you start at 20 to 40 to 60 years old, and you have that same level benefit for the rest of your life. Now, one of the best parts to utilize this is through what we call the IUL, the pay me back, right? Now, how does this necessarily pay you back, right? You are the policy holder. You're paying those premiums every single month. And now typically when it comes down to IUL, you don't feel like you're paying them. It feels like that you're saving your money because you're putting majority of that money, 60 to 80%, into a cash value account. Now, with that cash value account, you do have the ability to withdraw this money whenever you want as it accumulates interest. And that's the best part about this kind of insurance policy, because it's not just death insurance, but it's a life insurance. And it is very similar to how you utilize a bank today, whether you're banking wherever online or you go into a bank. It is a very same similar process, okay? To where you can pretty much take loans against whatever you pretty much have as your benefit, to be able to be safe, right? Same process. You have a customer service, same process. You understand that your money is safe and that it's actually going to be there. Now, in order for you to qualify again, you just pretty much qualify like it's a regular insurance policy, just to look at your health, just to look at your criminal background, just to look at your history when it comes down to your driving and your health, and which is one of the most important parts. Now, a lot of people like to compare the IUL to what you call an IRA or 401k. And the best reason that I would say an IUL is, very, very beneficial is because you have market protection. Usually when you're making an investment and on anything, you're exposed to losses. You could pretty much lose everything that you pretty much put up. And that's not the case with the IUL. You have zero chance of losing any money. That you have no contribution to no limit to amount of money that you can actually put in. We're talking about you have a protection against your money as well. And you have access to that cash value to be able to withdraw as if it was a bank account or savings account, right? And you also have that tax-free benefit. Now, versus an IRA, you do get that market exposure. You have limits to how much money you could put in. You have limits on the annual income that you have. And if you try to take out that money before 59 and a half, you're going to have to now pay at least 50% of that money to your taxes. Time Magazine said, why is it time to necessarily retire to 401k? Is because of these reasons right here. Most people are either they're retiring very early or they're retiring very late. See, if you think about back to 2008, when we were exposed to that economy crash, people that had $1 million in a 401k, it necessarily went down. We're talking about you had $1 million and some accounts went down to about $400,000. Now imagine that in your retirement account, right? You losing $600,000 in your retirement account when you're just a few years away from retiring is very scary, right? The third way that you utilize your life insurance is what we call annuities, okay? Annuities very, very important, okay? Because if you think about it right now, it's nothing more than just a guaranteed payment over a predetermined amount of time that earns interest. For example, think about you just won the lottery of $5 million, right? You never had $5 million before. What are you going to necessarily do with that money? If you were smart, you would get yourself an annuity that's going to pay you out an amount of money every single week for the rest of your life, or every single month for the rest of your life, to make sure you cover your bills and you can have fun with your money, but be able to enjoy it, right? It's not about just how much you necessarily have, it's about how much you're able to keep over a certain period of time. Or you want to pass on an inheritance, you can utilize an annuity, or retirement payout, you can utilize an annuity. People utilize this annuity all the time and be able to gain interest on their money. Now, you also have mortgage protection insurance, which I believe is really, really important because it's intended to pay off the policyholder's home mortgage if they were to pass away. I want you to think about it right now. Usually the breadwinner in the home is usually the husband. And if that husband passes away before the wife or before the house is paid off, now you're in a situation where you're exposed to foreclosures, you're exposed to late payments, and we don't want to put ourselves in that risk, right? So a mortgage protection insurance is necessarily going to make sure that if anything was to happen, you're going to be in a good, safe situation to where the insurance company is going to pay off the rest of your mortgage, so where you don't have to worry about the mother of these children losing their home. She's going to be able to keep her home, to be able to be in a safe financial position, to make sure that she's good to take care of her family, even if she has to do it by herself. Now, I want you to think about it. Why? I know you're probably thinking, why is this important? There's several reasons why making sure insurance is important, having insurance is important. I believe that the number one reason is because you want to make sure that you retire one day. You don't want to work for the rest of your life. You want to make sure that you can enjoy yourself at some period of time in your life. Now, if you don't understand these numbers, it's very important that you understand this, screenshot it, do whatever you have to do. But here is the route that we're pretty much on. If you're at the age of 30, you at least need to have at least 1 year of your annual salary saved up. Or age 40, you're talking about 3 times that. Age 56, age 60, 8 times that. By age 67, you want to have at least 10 times of your annual salary saved up. Now, in numbers wise, we're talking about at least $1 to $2 million saved up for your retirement. You retire at age 60, you want to have at least enough money for the next 20, 30 years to where you could live off of. And why is that so important? It's very much important because you don't want to necessarily have to go back to work. And the more and more we go into time, those positions are not going to be available by the time you reach 67 or 70 years old, just based off of technology. So I want you to think about it right now. Okay. How much money do you necessarily have saved up? And in reality, most people, they don't have money saved up at all, right? If you're talking about, the majority of the economy right now, only about 13% of the economy have about 300,000 plus saved up. And this is quite sad because that means that majority of those people, majority of the economy will have to necessarily work until they get that money. Now, if you're talking about the Black wealth, you're looking at it right now. An article came out not too long ago. It says if the racial wealth divide is left unaddressed, the median Black household wealth will necessarily be at 0 by 2053. Now, I don't know how this necessarily made you feel, but this necessarily put me in this position where I needed to protect my family, because it's not necessarily about me, but imagine the people that are going to be able to live after 2053. How are you going to put them in a position to necessarily move on? Now, if you think about it a lot further, think about how much debt that you necessarily have while you are living. We're talking about home, we're talking about student loans, we're talking about you have to pay off your car, you have to pay off all these different things that you've signed up for your life. And now if you were to pass on, now you're leaving all of that debt to your children. And it's very important to make sure that you don't put them in a bad position, because most people, they can't even afford to live. So imagine the people that can't even afford to pass on. So just taking a small lump sum of your money to be able to make sure that you can necessarily pass on some type of protection is very, very important. I know you're thinking, well, I can't afford insurance right now. Well, I'm going to give you guys, some of the basics of what, insurance costs. Now, if you're talking about 35-year-old female, we're talking about $16 on average $16 a month that you're paying for about $250,000 worth of coverage. Now, this will vary based on your health and some companies, but these are the average numbers that we're looking at. The older and older you get, the more and more difficult that it becomes to be able to receive some type of insurance. I mean, I'm literally making sure that people, we're talking about 60, pushing close to 70 years old, make sure that they get their insurance as close as possible to as fast as possible to make sure they are not exposing themselves to major risks, which will disqualify them from getting insurance. The best part is if you qualify for that IUL, you don't feel like you necessarily are just paying for your insurance because majority of your premium is now going to go into that quote unquote retirement account or that savings account. Just think about it. If you was to put $1,000 into an insurance policy right now, yes, you still have a death benefit, but majority of that money, $950, will go towards your index fund. $950 will be able to be withdrawn back out, which is very, very important. So if you want those living benefits, if I was you, I would go ahead and get that IUL. Now, in all 50 states, we're able to cover people to make sure that they're good, to make sure that they can pretty much receive this information. So if you're in the United States right now, all 50 states plus the territories, you're able to receive insurance and receive a quote from us today. On top of that, you're able to get this information from myself or anyone from my team. And I know you're probably asking, is this necessarily free? Whatever quotes that you guys are receiving, they're going to be free. We can get you quotes between any company that's out there that's a part of our brokerage. This is just pretty much most of the companies that we're working with, 30 plus, and we're adding on more each and every week to make sure that we could get people approved. I've seen people get approved with some of the worst diagnosis possible. We're talking about cancer, we're talking about diabetes, we're talking about lupus, and people are still able to get approved because we have a variety of carriers that are able to go ahead and make sure that this is happening. Now, I know you're thinking, how do I get started? When you reach out to our brokerage company or you've reached out to anyone that's on the team, what's going to happen is we're going to put in an application for you. That's our responsibility. Our responsibility is not to upsell you the most insurance as possible. It's to make sure that you get this coverage. But when we put in an application, that we try to make sure that we're as truthful as possible. So we want to make sure we send over your name, your date of birth. We want to make sure that you have a valid ID. Okay, so we can send in an ID number. We're going to ask you a few health questions. Okay, and you want to make sure that you're truthful because your MIB report, your medical report, is going to pop up, and want to make sure that they're able to go ahead and approve you. You do have to provide your social security number and provide a routing account number to make sure that you are who you say you are. And after we put in the application, about 3 to 5 business days, they're going to let you know that you are approved or not. And that's very, very important because that's what we would necessarily want to do with KeyLock Enterprises, make sure that you guys are comfortable with every single financial need that you pretty much have, okay? So if I was you, I would get back to the person that sent you this video and let them know, you know what, I need to make sure that my family is protected. I need to make sure that I talk to someone in your office to make sure that I necessarily get the best needs possible. So thank you all that tuned into this video. Let's make sure that we get you protected. Thank you.